I'm showing you guys this video today, but the truth is half of you guys will not execute on this. I'm going to literally give you sauce, the sauce of the sauce, and I don't care that I'm giving it out for free because God has blessed me with this, and now I might as well give it to you guys because I already made money from this. Just for proof, I mean, shit, made 1,600 or 1,300 in freaking 2 days. So yeah, all right. So boom, let's get right into it. This is my model, and I'm going to show it to you guys. But let's start. I'm literally going to start with the basics. What is my model based off of? Accumulation, manipulation, distribution. This is ICT's Power of 3 model. It's been literally happening like for the past 20 years. There's a YouTube video, and I'll link it in the description, of some guy. I don't know who he is, but he literally shows us this model playing out. And the YouTube video says 17 years ago. So if this played out for 17 years straight, like more than my freaking life, then I think it works. Okay, so boom. What do we have first? Accumulation. Accumulation zone. I'm gonna just say AMD. Accumulation, manipulation, distribution. All right, so A, we have accumulation right here. This is relative buy side and relative sell side liquidity. What is that? What is that? Like, I know I'm not gonna spit out random shit, but what is that? Boom. We hit a price level, a relative price level once, twice, 3 times. It's relative. It's happening multiple times, not just 3 times. Don't keep that in your brain. But it's a price level that we tap several times in the market, okay, which creates liquidity, which creates resting pending orders waiting to be filled. Okay. I mark this out with my GAN box. What is my GAN box? My GAN box is just a tool that I use to mark out accumulation. Right? We have buy side liquidity, we have sell side liquidity. I mark that out. All right, if you want to see my settings for that, they're right here. You can pause the video, screenshot, do whatever. Okay, boom. Next, that's it. That's all for our accumulation. That's it. It's just liquidity forming, we're arranging, and forming liquidity for our manipulation move to then come and sweep that liquidity. This is what we call a liquidity sweep, right? Where we sweep out liquidity in the market. This is sell side liquidity, like I was saying, and now we sweep that. We literally drop lower and then come higher. Liquidity sweeps are used for reversals in the market. What is a reversal? If we want to really go down to elementary school, I will. It's all good. A reversal is when we come lower to take out a key level or a certain liquidity to then come higher. Liquidity sweep. Okay. Sorry if you hear background noise. Yeah. So keeping it simple. Accumulation, we form liquidity. Manipulation, we sweep liquidity. Distribution, it's just a continuation from that liquidity sweep. All right, because liquidity sweep is for the reversal in the market. All right, so boom, we understand ICT's Power of 3 model. Accumulation, formula. I'm saying it multiple times so you guys can get it in your freaking dome. Sorry, I don't mean to be hostile, but that's what it is. Accumulation, forming liquidity. Manipulation, sweeping liquidity. Distribution, distributing that liquidity to those who were patient and didn't get faked out by this. But we're not going to go too deep into that. All right. So let's actually go into the model. How do I use my model based on this? All right, so boom. My mouth is a little dry. All right, we are accumulation, right? So we form our accumulation, right? So we already understand that. Now we have our distribution move. Sorry, we have our manipulation move. All right, so we want to take out sell side liquidity within that manipulation move. All right, so remember, sell side liquidity is this. We have buy side up here because it's on the buy side of the market, and sell side liquidity, sell side of the market, right? Just think of it. If it's on the up here, it's buy side, down here, it's sell side. So our manipulation lead comes and take out that sell side liquidity. We come lower to now take out another key level of liquidity. What is a key level of liquidity? This can be previous session, highs or lows. I'm gonna go into what all this means. Just general, you can just say freaking data highs slash lows, and also previous day highs slash low. All right, so any of these levels are considered key level, or just like general liquidity too. So it's more general liquidity if that's formed. Usually call it internal liquidity. All right, if it's on like the inside skirts of the market, right? But we don't got get into all that terminology right now. We just gotta know that manipulation takes out not only sell side liquidity, but it takes out another key level, right? And this is what validates that manipulation leg. All right, so this is our manipulation leg. We got accumulation, manipulation. All right, I'm gonna repeat it one more time. Accumulation, forming liquidity. Manipulation, we take out that liquidity, right? For a liquidity sweep, right? And we also want to take out a key level. All right, so we take out that key level, and now we start our distribution leg. But what do I want to see in our distribution leg? Usually we will create equal highs around here and consolidate for a little, right? Because what we want to create is like a V shape. Notice how this is like a big V, right? So keep that in mind. All right, so now what we want is something called a change in state of direction. Some people might call this break of structure, but I call it change of state of direction because I want to, because it's my model. All right, so we're going to then mark out with Alt J or Option J on Mac and mark out these equal highs, right? Because these equal highs are a point where we come and test that CISD, that change in state of direction. All right, because what happens if we come displace higher and come higher from this change in state of direction? No, we don't enter the trade, but we have validation that we could be coming higher. All right, so now once we displaced, it can be a wick or whatever. We can just wick above. It doesn't have to be nothing crazy. Now we know that this order block is now validated, because what is an order block? The last candlestick of the previous leg. In this instance, it's the last candlestick of the previous leg lower. So now this order block is validated. All right, so now we kind of have something to hold us, sustain us from coming any lower. All right, boom. What are we looking for now? We want to create a continuation confluence. What the heck is a continuation confluence, MT? It is where we make an order block or a fair value gap or an inverse fair value gap or a breaker block. I'm not even gonna mention that because I don't even use that like that. But these three. And if you don't know this terminology, I teach it all in my course. It's a free course on YouTube, here on YouTube. Okay, so now we want an order block, fair value gap, or inverse fair value gap to then be created. What do we call these? Continuation confluences. So any of these, right, as we're coming higher, right, we want to come lower to one of these and retrace off of that and then displace again from CISD and come even higher to then validate that change in state direction. All right, so once we say this is a fair value gap, right, and we came into that and retraced off of it and came higher, now this change in state direction is now validated. All right, so boom, we enter in our trade. But what the heck are we taking our trade up to? Right, we have good risk management. We know we can put our stop loss below this fair value gap, but what do we take our trade up to? We take it up to the top of that accumulation zone. That is our first draw liquidity. What is our second draw liquidity? Any other liquidity that we have above that. Any of these previous session highs, lows, data highs, data lows, previous day highs or lows liquidity. Any of those levels of liquidity, we take our trade up to. So boom, 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 boom. All right, now we're right here. We're at the top of our accumulation zone, right? If you want to mark out the accumulation zone so it's easier on the eyes, I recommend you using this tool called the Gann box, right? Gann box right there. Here are my settings. You can check that out. I feel like I already said this. I probably have already. But there you go. Got the Gann box. And now what am I going to do? I'm going to take out one position. I'm usually trading 2 contracts. I'm going to take out 1 contract right here. All right. Because what we can do if we don't displace higher from this, because it's another change in state, if you realize that, on a higher time frame, it's another change in state. So if we don't do that and we come lower, then I already know my stops are at break even, and we already done the trade. But if we disrespect this, we're out the trade. Okay, we already made our money for the day. But if we don't, and we displace past this, we can expect market to come higher towards these next draws of liquidity. All right, and that would be our trade. And as simple as that. There's nothing much else to it. AMD, sweep out key level, make a continuation confluence. Addition to that, we have a change in state direction, and we take it to our nearest draws. If we keep coming higher, then we take it to our next draws. So what is that? Now let's look in the charts. And I'm not playing, like, literally, this is, y'all can see the time. Oh, wait, no, you can't see the time on here. My phone. It is 7:44. Look what time it is in the charts right now. All right, it says 4:10, but this is incorrect. This is right now. This is not replay. There's no replay mode on. This is like current time in the charts. All right, my time might be off, but regardless, what do we see? Immediately, I know you have to have a more trained eye for this, but I can see AMD on both sides of the market right now. Boom, we set up for shorts right here. Accumulation, manipulation, distribution. And we also set up for longs. If we look a little bigger, we see that we have accumulation zone right here. We formed relative buy side, and it doesn't have to be perfect. It has to be relative. All right, so boom, right here, tap the relative price level. That creates buy side liquidity. All right, relative price levels, sell side liquidity. Mark that out with our GAN box so it's easy on the eyes. We got our accumulation zone. We manipulate that. What did we take out with our manipulation leg? The bottom of that accumulation zone, which is good for like taking out the sell side liquidity, right? I'm gonna just say sell side liquidity. We took out sell side liquidity, took out another key level, right? That's a nice internal low. Took that out to the T. What do we have now? Our distribution leg. What do we look for first? We want to see a change in state direction. We have these equal highs. We want to come test that. We displace past those equal highs beautifully. Right here, change in state. All right, now we're coming a little higher, right? Because now we know that this order block is validated, which is just like good for a cushion. And now we want to look for a continuation confluence. We see that we formed a fair value gap. This is all playing out. I did not plan this. This is all playing out live in the market, right? Just now. All right. I don't trade Asia session, so I didn't take it, of course. Boom. Now we're in our trade. We see that we came back. Look, market came back to this continuation confluence to retrace off of this fair value gap. Okay. We're going to put a stop loss. If you want to be a little risky, put it under this fair value gap or this order block, but I'm not being risky. But I'm putting it under this fair value gap. Nice tight stop loss, great risk management. Take it to the top of that accumulation zone. Boom. That hit TP1. What else do we want to hit? Let's see if we have any draws. We have the inverse of this fair value gap. Let's mark that out. Boom. Where did market go to? The inverse of that fair value gap. Boom. Right? I didn't tell you guys that inverse of fair value gap is a good draw liquidity, but it is. It is. If we want market to inverse of fair value gap, that's a great draw liquidity. All right. Boom. That's the model. And it just played out. Right? It just played out too. Like, this is not like me just putting it on replay mode and showing you guys in hindsight what it is. This is it. And this is how it plays out. And this is what I do. And don't try to add on to this model. Don't try to take away from this model. Don't let your psychology mess you up, right? You control whether you want to be profitable or not. And I gave you this model. God has blessed me with the knowledge to study and perfect this model. And now I want to share with you guys. Okay? Because I already can make my money from this. You guys making money off problems does not affect me making my money in the market. Boom. That's it. Whole video covered everything. Now, I know half of you guys are not even going to execute on this. This is why I don't mind sharing this information. I'll see y'all in the next one or tomorrow. Adios. I know half of y'all won't even watch this video all the way. Like that's what I'm saying, bro. Y'all like this information is out, but I doubt you guys are even gonna execute on it, bro. I just gave y'all a whole playbook to make 6, 7 figures. All right, I'm done.